Are you a homeowner that's feeling stuck in a house that no longer suits your needs? If you've owned your home for more than 5 years, chances are you're sitting on a pretty sweet interest rate, and that can be really scary to give up. But what if you could sell your current house, buy the house you really want, and still have a similar mortgage payment? Let me show you how. The housing market is stuck between a rock and a hard place. We don't have enough houses to sell, but at the same time, with interest rates going up, we have a lot of current homeowners who don't want to sell because they don't want to give up their super low interest rate. And quite simply, the market stops when we lose trade-up sellers. So what do we do? For those of you who've owned a home for a while, I think there's a solution. And it's a way to get you into the house that you really want without drastically changing your budget. Here's what I mean. Let's say you bought a nice 3-bedroom, 2-bath house in 2013 for $150,000. You used an FHA loan as a first-time buyer and were able to lock in a 30-year interest rate of 3.25%. With that, including taxes and insurance, you're probably looking at a mortgage of around $1,100 a month. With the massive amounts of appreciation we've seen over the last decade, it stands to reason that you could probably sell that home for about $375,000. If you're able to sell that home for $375,000, once you pay off your mortgage and your closing costs, you're gonna walk away with about $208,000. With a $208,000 down payment, you're gonna be able to put a sizable amount of money down on your next house, which will allow you, even with today's higher interest rates, to have a very similar mortgage. Depending upon where you shop and what you buy, it might be slightly more, slightly less, or the same, but it gives you a lot of options. For example, if you wanted to buy a house that was $400,000, with your $200,000 plus down payment, your mortgage would end up being around $1,450 per month. And if another buyer was looking at the same $400,000 home and didn't have equity from a previously owned house, they'd be doing a 20% down payment of $80,000, and their mortgage with taxes and insurance would be about $2,300 per month. And that, my friends, is the beauty of owning your home early. Doesn't mean you have to buy the biggest, nicest, best house right away. Just buy something, let the appreciation grow, and then use that equity to move up later in life. It's how you build wealth time and time again. The numbers may or may not work in your area or for what you're looking to buy, but right now I think a lot of sellers just feel like they're stuck without any options. And what I want to illustrate to you is that equity is a major tool in your toolbox, and you can use it to leverage your next purchase. I'm Lindsey Johnson, your resource for all things real estate. See you next time.